Another warm welcome. You're watching Your Trades. This is Priyanka Pal. Yet another day of selling what we saw. Lackluster earnings, profit booking. Of course, the persistent, the broadened sentiment which is hit by persistent FI selling. That again weighted on the Indian markets again, and we lost another 300 points on Nifty to close nearly 24,400. We closed 700 points down on Bank Nifty. In fact, broader market was severely hit. It was broad-based selling. Mid-cap, small-cap, they both lost. These both indices lost more than 2.5%. Mid-cap lost 2.5%. Small-cap was down by more than 3.5%. So another bad day for the Indian markets, and we've seen that all sectoral indices which have closed in red today, with deeper red color coming in from sectors like PSU banks, which closed down by more than 4% of cut today. Realty lost nearly 3.5% today. PSC, metal, they all closed with more than 3.5% of losses today. In fact, the set of stocks which are yet to report numbers, you talk about stocks like Coal India, SBI, they are the ones which are the top losers on the Nifty, if you talk about on the benchmarks. In fact, if you talk about the top stocks that lost the most on Nifty was M&M, Adani, of course, after the numbers, Coal India, SBI. Mid-cap also we saw major of the losses coming in from the PSU bank stocks like PNB, Canara Bank, BHEL kind of stocks. The only stock which was showing strength in the entire banking pack, handful of stocks that you could see that closed in green today, was City Union Bank on the back of the good numbers and the positive brokerage notes that has come in, that its ROA could be in the range of 1.5 to 1.7%. That kept the momentum in the stock high. It was trading at a premium at the start only. It's opened with a gap up, and post that it continued that momentum. But the kind of losses that we've seen, the profit booking, the hammering what we have seen on the stocks, especially in the mid-cap, small-cap space, stocks like Nesgao, Century Textile, Amber, if you remember, Amber Enterprise, before the numbers yesterday, it was trading with the 10% of gain. Today, it was the reverse. 11% of the cut, what we saw on the stocks today. Of course, the 7 lakh crore of market cap that got eroded today because of the persistent selling and another set of selling what we saw. And today's selling were more intense than what we saw in the previous day, because the kind of move we've seen in mid-cap and small-cap, that is a clear example of the selling getting more intense. But are we getting into oversold zone? We'll understand this from our expert. Hyundai Motors, of course, this was one of the key event for the day, for the month, and in fact for the year also. But then muted set of listing, the stock closed with 7% of cut today. Of course, muted set of expectation, that was what was getting kicked in, just because of the couple of reasons: the sentiment not favoring auto sectors much, higher valuation, and maybe the kind of retail response, the lackluster response we saw on Hyundai. This was expected to be on the muted lines only, and that's what we saw also. But then Ambuja, that acquired 46.8% stake in Orient Cement, that actually kept the stock afloat. Not just Orient Cement. In fact, if you look at the the kind of consolidation which is happening in the smaller players in cement stocks, many of the smaller cement stocks which could be potential acquisition, which could be potential candidate for acquisition, they were also buzzing in trade today. But Ambuja acquired Orient Cement. That stock has actually been quite a fancy amongst the entire pack. Earlier there were reports that there's a different group which was chasing the stock, but then they closed the deal with Ambuja Cement. But the kind of move we saw, Paytm, that actually swings to black with its surprise profit. Paytm, posted its set of numbers, and I think we've got numbers from Zomato also, but we get you later that. Now the main focus could be on the other set of Nifty earnings like HUL, SBI Life, and Asian Paints, that the market would eye on. For sure, the numbers so far, the earnings so far have been lackluster. They failed to impress the street, and that's what the muted set of expectation was already placed in for in terms of earnings, and the earnings so far, reported earnings so far, has been disappointing. Well, let's see how these stocks pan out. HUL, SBI Life, and Asian Paint. Asian Paint could be a little better on the side, because of course the kind of crude prices which has been in the check, this actually helps there to aid the margin. But then let's see, we'll have to wait and watch. But let's understand now what is the strategy that a trader should materialize from here, in sense of index, in sense of stock specific strategy, To understand all of that, we have Aditya Arora today, who's the founder and multi-asset research who's analyst with Adelic. Aditya, very warm welcome. Not a very good day. In fact, the whole week, and in fact, we've crossed more than 82,000 crore of selling by FIIs, though DIs have been buying, but still we've seen a persistent selling, sentiment getting hampered day by day. Aren't we in the oversold zone? First, tell us about that. And also, now, where do you find the immediate support on the index?
Very good afternoon to you and to everyone. Although market has been selling off a lot, and it has been across the board. Whether you look at banking space, you look at IT space, or any of the heavyweights, small caps, mid caps, selling is across the board. Important levels to watch out are 24,000, where the put writers are present. That's the important level to watch out. And if I talk about the market, then FIs have been aggressively shorting in the market. Whether you talk about the cash market or you talk about the derivatives front, every day there's selling figure. So in such kind of a market, everybody should avoid catching the falling knife and let the market settle down. Actually, that will offer an amazing opportunity because, with the quantum of fall and the speed of fall, market will give an opportunity, as you were talking, oversold market. So that kind of a level could emerge around 24,000. As per the data, derivatives data, that is the important level to watch out. And second point, Hyundai IPO also sucked a lot of liquidity from the market. Hence, that is also, and that listed at discount also. So that is also putting pressure in the market. And the third point, which I want to talk about, is that global markets are also jittery. Today, Nikkei is down 1.5% because of macro news. And S&P was also a little, shaky yesterday. So the overall scenario is putting pressure. Let the dust settle down. That will give very good opportunity in defensive pockets.
That view coming in, this is Snehi also joining in on the show. Can you give us a sense of where you are seeing value right now and what are the stock picks that you would recommend for our viewers?
In such kind of a market, defensive is always a great buy, and we have seen today some stocks are clearly shining. One of them is from the FMCG basket, Varun Beverage. It has classical, very good fundamentals, and the technicals are also outstanding. Today, the stock was up 2.7%, and the price action is good, volume is good. So this is a buy at 595, 560 is the stop loss, and 630 to 640 is the target. So this is the first one, and second one is from the pharma space, Dr. Lalpat Lab. That is a buy at 3310, 3240 is the stop loss, and 3380 to 3420 is the target.
So those levels that you are spotting for us, as well as your stock specific picks coming in, let's just shift focus and let's address the numbers that are that were flashing on the bottom of the screen earlier. Let's talk about Zomato's earnings. These earnings have trickled in a few minutes ago, and when you take a broad sense of it, it's a rather mixed set of numbers coming in. Revenue has come in at 4,799 crores compared to 4,206 crores, and in comparison with 4,681 at what we were expecting here at ET now, it's a 14% sequential rise and revenue largely in line with what we were expecting. Net profit, however, has come in at 176 crores compared to 253 crores this time last quarter, which is lower by 30.5% on a sequential basis. And also what we were expecting for the net profit was 209 crores, which means it's a big miss coming in on the profit. But also what's important to know is that there is a current tax figure of 76 crores this time, which was 0 crores. It was a zero tax in the last quarter, and for quarter 2 this amount has gone up to 76 crores. So that is actually what is weighing in on the PAT this time around. If you take a look at what the EBITDA has come in at 226 crores compared to 177 crores, an uptick of more than 27.5% on a sequential basis, and we were expecting that to come in at 209 crores, which means EBITDA has been a beat, so it's a good performance on the EBITDA front. It's a miss on the PAT front, and margins largely in line. We were expecting 4.5, they've come in at 4.7% versus 4.2%, a 50 bips uptick coming in on a sequential basis as well. Let's just take a look at what the food delivery business and what the other segments have done. Food delivery GOV has gone up by 5% QOQ, which is what we were also largely expecting. Quick commerce GOV is up 25% sequentially. Going out GOV has grown 46% sequentially, and the like-for-like growth for that is 29% sequentially as well. If you take a look at the revenue, you have food delivery revenue that has gone up 4% sequentially and 21% year-on-year. Quick commerce up 23% sequentially, and in fact more than doubled on a year-on-year basis. Going out business, this one has done really strongly for Zomato this time, because 62% hike coming in just on a sequential basis, and a 214% jump coming in on a year-on-year basis as well. When you take a look at Hyperpure, also did well, almost doubled year-on-year, and a 22% jump coming in sequentially as well. So while overall these numbers are looking good for Zomato, it's only a miss on the net profit front coming in on the back of the taxation, but other than that, it's a good set of numbers coming in. Also, what's important to address is that the board has approved an 8,500 crore QIP fundraise coming in. So we'll be looking forward to more commentary, but well, yes, this is what the Zomato numbers for quarter 2 look like.
All right, the QIP news is of course interesting and exciting many of the street participants, but of course the base was already higher. That's why what we saw that on a sequential basis, the miss which you've just pointed out. All right, moving on, valuations continue to be a challenge when it comes to the market, according to Ashwini Agrawal, the founder of Demeter Advisors. Let's listen into what exactly he said about the market, his interests, which pockets he finds value in.
Earnings season's turning out to be a little bit soft. I think the economy has slowed down. Now let's see how the festival sales do, and if there's a sort of sharp uptick in the economy once again, which as per the RBI had slowed down because of unseasonal rains and excessive rains, but I don't know if that will happen or not. And I think the valuations are continuing to be challenging in many pockets. So I don't think that there is a lot of room for the market to move up. Now, how much will it fall is something that I'm not very clear about, because every fall has been rewarded for buyers. And I think that lesson has gone down very well. So, any dip, you see a massive amount of buying coming in. Obviously, this time around, things are a little different because there's also a lot of supply of paper, both primary as well as secondary, which is happening. So that might actually kind of neutralize the inflows that we are seeing. But I don't want to underestimate the power of the local investor. So it's difficult to say how much it will go down, but I don't feel very good at this point.
From Ashwini Agrawal. On that note, we'll slip into a short break on Your Trades. We'll be right back with more about how today has panned out. You stay tuned.
Welcome back. You're watching Your Trades, and now trying to get you some action from the derivative space. Of course, the kind of bearish candle that Nifty has formed on in yesterday's session only, that was indicating weakness only, and we could not hold on to important supports like 24,700. We're much below 24,400, nearly nearest to the above to that level. Of course, we close, but the trend has changed now. Nifty, it's a clear short built-up trend. For Bank Nifty also, it's a short built-up. Tomorrow is Bank Nifty's expiry, and then it's followed by Nifty expiry. But then now the trend on both the benchmark is short built up. VIX is again on those levels also. Shivani was also pointing it out yesterday. It's not cooling it off. The VIX is not cooling at all. It's again at 14 level, above 14 level only. Now the higher strikes, the closer strikes now, 24,600, 700, they seem to be resistance, because there is where the maximum of the call writing is happening. And of course, the put buying looks like a immediate support for the market as of now, with the action that what we saw on the active puts and active calls. But the maximum of the put buying which has happened is for the strike like 24,400, 24,500. So we don't know exactly, are we oversold, or is that we can drag a little bit more from here. We'll have to wait and watch.
Absolutely no support level actually visible right now, and that's something to worry about. But on that note, let's also talk about the big story of the day, and we've seen some big action, big moves coming in the cement space today, because Ambuja Cement has acquired Orient Cement at 395.4 per share, indicating a premium of 12%. Let's take it across to my colleague Ashesha, who tracks the sector closely and has more details about this deal. Ashesha. Well, absolutely. So Ambuja Cement will be acquiring about 37.8% stake in Orient Cement from the promoter and promoter group. Additional about an 8.9% stake from certain public shareholders, which totals to about 46% stake in Orient Cement. And they will also have to make an open offer for 26% public shareholding. All of these transactions will be done at about 395.4 rupees per share. As far as valuation is concerned, remember Orient Cement has operational capacity of 8.5 million tons per annum. So if we consider 8.5 MTPA, the deal is valued at about $113 per ton. But remember, this is not it. Orient Cement has additional capacity of about 8.1 MTPA, which is ready to execute projects. And apart from that, it has additional limestone mine at Chhattisgarh, which can support 6 MTPA capacity. So if we value both these additional aspects at about 1000 crores, the deal is valued at about $99 per ton, which is largely in line with the valuation at which most of the recent transactions in the cement sector have happened. Now, analysts, meanwhile, company has said that the deal is expected to be completed over the next 3 to 4 months. And remember, last acquisition which Adani had done was Penna Cements in June this year, which was valued at $89 per ton. So, as far as valuation is concerned, it is largely in line with that in that band of about $90 to $100 per ton, the range in which most of the transactions have happened over the last 1 year or so. So, yes, a good acquisition that has come through, and consolidation clearly is intensifying pace in the cement sector.
Consolidation intensifies amongst the smaller players in the space, and of course CK Birla Group, we know that in the past also they've reportedly turned down many of the other offers because of the valuation mismatch, but this as what Ashisha was saying was a good deal. Thanks very much, Ashisha, for sharing all that details. But the Adani's Ambuja Cement acquires for 8100 crore. We did caught up with the Orient Cement parent CK Birla Group themselves. The group CFO Madhavan Hariharan, he highlighted the synergies from the transaction going ahead. What can that be? Let's listen.
They want to expand, so obviously I'm expecting that the expansion plan that we are already started will continue in full swing. So there is obviously looking for value creation opportunities for them as well, and there is enough and more in the asset to do that. And with their combining their capabilities, I think this is a great platform to build for the asset and for them as well. Our capital allocation strategy is to continue to invest in the businesses that I had mentioned already, and we have already been doing this over the last few years in terms of the investment. So if you see other businesses of the group, we have been both organically and inorganically growing both within and outside India. So this will only go to help us accelerate that strategy. We are a $3 billion group now. Our vision is to double that in the next 5 years, but more importantly, to triple value creation. I think we have done a good job so far over the last few years in terms of improving value, but the real opportunity is also moving forward. And we have an ambition of also expanding globally, and this will only help us accelerate that strategy as a group.
Okay, word coming in from the management of CK Birla Group, but let's talk about the much anticipated, much awaited IPO that finally made its Street debut today, and that is a Hyundai India Motor. Now, after a muted listing, Hyundai India management remains optimistic about the SUV market and expanding their share in the country. CEO Tarun Garg added that their royalty to the parent will not change. Let's go across and listen into what he had to say.
Data EV is going to be launched in the next quarter, followed by 3 more EVs in the mass and the mass premium segment. This EV plan is being, also being backed by a very strong localization. So as we speak today, the battery packs are being localized in Tamil Nadu. Going forward, we are looking at LFP cell manufacturing with a local Indian partner. We are looking at powertrain, drivetrain and power electronics as well. Also the charging infrastructure. So which will again be a growth driver moving forward. At the Q1 financial year 24-25, which are already a part of the RHP, already include the higher royalty rate. So I think this is something which I just want to clarify. So Q1 financial year 24-25, which is April to June period, financial year 24-25, it includes the higher royalty rate.
All right, so a long runway. In fact, a couple of brokerage notes which came in before the listing today, and the Nuvama referees, they've given a target like 2200, 2400, the basis of the, the kind of premium valuation the company on the basis of good fundamental will drive. But today, it was of course a muted listing, and then the stock closed also with a loss of 7% today. But then let's get you more stocks that were buzzing in trades today. Gaurav joins in with a list of stocks. Gaurav, over to you.
Well, yes, overall it was a weak day for the market, but when it comes to City Union Bank, we saw a good set of numbers. Net interest income increased almost by 8.2% on a YY basis. Other than that, we saw some recoveries, and at the same time, Macquarie also maintained its outperform rating and a target price of 185 rupees, saying that the growth engines are again turned on, and as a result, we saw some 10% uptick in this counter. Next, let's talk about Varun Beverages. A good set of number was seen here as well. Revenue increased almost by 25%, while net profit increased almost by 24%. We saw some expansion in EBITDA margins as well, and as a result, we saw some uptick in this counter as well. Next, let's talk about Paytm, because when it comes to numbers, revenue increased almost by 10% sequentially, while PAT registered a number of around 928 crore rupees. This includes exceptional gain of around 1300 crore rupees in this quarter. When it comes to EBITDA before ESOP, there also we saw an improvement of around 350 crores on a sequential basis, but we saw some pressure in this counter. Next, let's talk about Ola Electric, because company has said that they have responded to the show cause notice. They say that 99.1% of the problems and complaints were resolved by the company. As a result, we saw some uptick in this counter.
Okay, on that note, it's a quick goodbye from us on Your Trades. Priyanka and I will take your leave. Thank you so much for watching.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.